Hi guys, it's Thomas here from COTbase.com. Welcome to a weekly COT review. Today we're going to be looking at the 22nd Commitments of Trades report of 2020. Before I start the review, for anybody new to COT analysis, let me just show you what we got here at COTbase. A lot of helps. Let's start off with this help link over here where we share some basic knowledge throughout these tutorial videos of the COT report and how you can analyze it, some educational materials as well. We've also got some written materials here on COT, all sorts of explanation on the different COT report types. We show you some typical setups, talk about what markets are covered. So a lot of information here. So give it a try if you're new to COT and COT analysis. So back to the review and starting off with our first market, the Kansas City wheat. You can see we've got a 21% change over there in commercials position. Now, I would say this review is interesting in the sense that we are going to be looking at wheat markets in the first half, starting with the Kansas City wheat, followed by the Chicago wheat, and then leaving the story with the Minneapolis wheat. Now, as you may see, we've got some different signals over there, and I think it's a good example for anybody new what you should do when we've got significantly correlating markets. You should always analyze each and every market separately from the COT report's perspective to really gather a more wider perspective of what's happening. Here I should mention that we actually have these complex markets that are here. You can see the wheat complex, which is unique in the sense that this is created by us, and it's made up from combining COT positions from more markets into one, and we do that by creating the dollar equivalent of these COT positions, and then we add them up basically. So that's what we do here. So we will start off with the Kansas City wheat, and it's going to be interesting to see the little slight differences from market to market. So here we have a 21% buy COT change signal, as you can see from the green color over there, suggesting we may see further a rally in this market early next week. We had a pretty decent change size last week already, and you can see it sort of stopped this declining move, and we've seen a little bit of rise this week. If we move on to the 5 years chart, of course, we can get a more wider perspective of the COT extreme situation in this market. And if you look at the most bearish extremes back from 2018 and the most bullish COT extremes, you may see that we're more or less in between the two, possibly a little bit leaning towards the bullish side right now. So that's really what you can gather from these charts from a brief look at them, of course, without digging deeper. Going on to the Chicago wheat, we have a 14% change over there in commercials positions. So back to the 1 year's chart. Interestingly, here we have a opposite signal suggesting a possible weakness, or further, I should say, following the trend that's been going on since March, 25th of March, pushing the market lower. If we move on to the 5 years chart and try to search for the two extremes, we've got the most bearish extreme from 2017 over here, and the most bullish one from the same year, but only from December. By the way, beautiful signals if you look at it. Wonderful signals, signaling the top over there, and then the bottom prices here. So just a reminder, usually grains, wheat markets, they're pretty, we get pretty successful COT extreme signals over there. So we're more or less in between those two extremes, similar to the Kansas City wheat. No change over there. And we can move on to the Minneapolis wheat with a similar change in traders' positions as we've seen in the Chicago wheat. And of course, if we look at the 1 year's chart, it's visible. Again, the story here is we are expecting a bit of a decline happening in this market, possibly early next week. That's what the signal is telling us. So we've got two markets telling us a more bearish picture in the short run, and then we've got the Kansas City wheat, which seems to be showing us a little bit more strength. We shall see what happens, but jumping to the 5 years chart, here we can see a much different picture than the previous two wheat markets. Here we have a more significant bullish COT extreme, no question about that. You can easily see that on the charts. And here again, we can conclude that these signals are effective throughout the time. So we are at those bullish extreme levels. And as I said in the Kansas City wheat, although it was more or less in between the two major extremes, I said just by looking at the charts, it seems as if it's leaning more towards the bullish side. So we could conclude, of course, these red colors may be a little bit distracting, but nevertheless, I would say throughout the wheat markets, possibly the extreme is building up on the bullish side. So maybe not in the near term, but possibly in the next couple of weeks, month, or maybe years ahead of us, we should finally find a significant bottom and possibly a significant rise in the price of the wheat. Now moving on to large speculators, COT Extreme, we've got corn on top of our list with an all-time signal. So let's open that, and here we have that all-time large speculators extreme. Also, of course, commercials closer to their all-time extremes. There's no question it's a bullish extreme, right? If you look at the market for this 5 years time span, we are at lows and we have that significant bullish extreme. And you may see what happened to the market when we had such an extreme just before this rise happened. That was back in 2019, more or less a year ago. Then we have some other examples from 2017 and going back 2016 again. So this, of course, as you may see, as a volcano, stress is building up in the mountain. It's hard to tell exactly when it's going to erupt, but it eventually will. And of course, that will signal a major shift in the trend. The Swiss franc is our next market with a 203 report extreme in large speculators. In this case, we're talking about more of a bearish COT extreme, which I should say not necessarily. We can look at it not in a way, this is the time to go short, but possibly maybe this isn't the market you want to go long, right? That's a different perspective. So small speculators pretty optimistic, at least in this 5 years time span, closer sometimes going net long in the market. I would say that small speculators leaning towards the long side that's usually a good bearish sign from the COT report analysis. And last but not least, let's have a look at the Japanese yen with 185 report extreme in large speculators. You can see that over there again. Of course, we're not that surprised. There's some sort of a correlation between the Swiss franc and the Japanese yen being safety havens. This again is indicating a bearish extreme that could grow to larger levels. If you look back from 2016, we had a much larger bearish extreme in the market just preceding this top, and now we are gradually going towards those levels. So interesting analysis. Of course, there's much more to do here at COT Base, and of course, there's other markets to analyze. I'm only showing you a few. There's livestock, stock indexes, interest rates, and cryptocurrencies as well. And of course, there's a lot of data sets to analyze with the newer COT report types, the disaggregated traders and financial futures, commodity index traders, of course, all the data types available, the futures and options data, and our special options only data, only available at COT Base. I talked a lot, so I'm going to say goodbye to you. I appreciate your attention. Thank you very much for being with me, and I hope to see you next week. Have a great weekend. Take care. Goodbye.